Okay, so let's get right into it. The crypto world is, well, it's completely torn right now. You've got one side screaming sell, telling everyone a deep freeze is coming. And then you have the other side whispering, buy the dip, totally convinced this is just a little shakeout before the next big run. So what's the real story?
Yeah, that's the big one, isn't it? The question on absolutely everyone's mind. After a really rough week, the market is sitting on a knife's edge. And honestly, the answer you get really depends on who you're listening to and which data you trust.
And this number? This is what's causing all the panic. In just the past week, the total crypto market cap has dropped by 6.6%. That has basically wiped out all the gains we saw at the start of September. That is a serious, serious hit. So what does a drop like that actually look like? Well, right now, the charts are just a sea of red, and it seems like a big trigger for all this was what the U.S. Federal Reserve has been doing lately with interest rates. And man, the damage is real. We're not talking about a small, insignificant dip here. I mean, look at Solana, a top 10 player. It's been hammered, down almost 20%. Even the giants are feeling the pain. Bitcoin has crashed below that really important psychological level of $60,000. And with Ethereum now under 3,500, some folks are already calling it. They're saying it's officially in a bear market. So all this red brings us to our first major theory, the pessimistic one. The bears are definitely out, and they believe this isn't just a correction. Now, they think this is the start of a long, cold crypto winter. And you know who's leading this charge? Longtime crypto critic Peter Schiff. He's not just predicting a little downturn. He's forecasting a full-on deep freeze. He's basically saying we're not going to see spring for a very long time.
So, what's the evidence for this crypto ice age? Well, the bearish argument really stands on three main legs. First up, history. If you look back over the last 30 years, major bear markets have often kicked off right as the Fed started cutting rates, which, just happened. Second, people are running to safety. As crypto is falling, traditional assets like silver are actually climbing. And finally, there's the domino effect. If Ethereum is already in a bear market, how far behind can Bitcoin really be?
Now, to get this next point, we have to quickly talk about a key term, the short-term holder cost basis. It sounds technical, I know, but it's pretty simple. It's just the average price that recent buyers, the short-term folks, paid for their Bitcoin. Think of it as a critical line in the sand.
And here's the big problem for the bulls. That line in the sand sits at $61,500. But Bitcoin, it's trading below that. That means, on average, all the people who bought in recently are now losing money. If the price can't get back above this level and hold it, technical analysts see that as a massive, flashing red flag, a classic sign of a bear market tightening its grip.
But hold on, that's only one side of the story. The bulls, well, they see this whole situation completely differently. They're arguing this isn't a crash at all. They're calling it a classic bear trap, something designed to scare off the nervous investors right before the next massive leg up. This quote pretty much sums up their entire argument. The analysts in this camp, they're looking at the bigger picture, and they believe we are nowhere near that crazy euphoric peak that usually ends a bull market. In their eyes, there's still a lot of room to run. You see, they view these market cycles as following a pretty predictable pattern. You get a long period of growth, then a sharp mid-cycle correction that feels like the end of the world, which is exactly where they say we are right now. And what comes next, they argue, is the best part, the final explosive pump that leads to mass euphoria.
And their proof? Well, it's all about what's missing. At a true market top, you expect to see certain signals flashing bright red, but they're just not there yet. For example, the MVRV Z-score. That's a metric that helps spot tops and bottoms. It's not even close to the peak zone. We're not seeing a mass rush of coins off exchanges. And maybe the most important thing of all, the fear and greed index is nowhere near extreme greed. That euphoric, we're all going to be rich feeling just hasn't shown up.
Okay, so we have two powerful, completely competing theories. The bears are pointing to the price action and historical Fed patterns. The bulls are focused on the on-chain data and the structure of the cycle. So, who's right?
When you boil it all down, this whole thing is going to come down to a few key metrics. The bears win if Bitcoin stays below that crucial 61.5K level, and we start seeing long-term holders dumping their bags. The bulls, on the other hand, they need the exact opposite to happen. They're watching for the price to reclaim that level and for the big institutional players to keep buying up everything they can.
So the key takeaway here is pretty simple. Watch the data, not all the noise and hype.
The battle lines have been drawn, and these are the metrics that are probably going to decide who wins this fight. It's not about trying to guess, it's about watching to see which story the data decides to tell next.
So where does that leave all of us? Right here, with the market perfectly balanced on a knife's edge. It's a massive tug-of-war between the story of a coming ice age and the story of a temporary trap. And both sides have really compelling evidence, which makes this one of the most uncertain moments we've seen in crypto for a long time.
And that really leaves us with the final question. Are we hearing the first rumbles of a major storm on the horizon, or is this just the quiet, tense calm right before the next explosive rally kicks off? I guess the next few weeks are going to tell the whole story.